Welcome to EXP discussion of ACCA paper P4 on advanced financial management. Now we conclude our discussion on a very interesting and open-ended topic, I might say, with emerging issues in finance. This reflects very much the intent of the paper. It suggests that while there is a great deal of technical detail and rigor in the concepts that have to be mastered for the exam, the candidate comes away with an extremely powerful grounding and preparation for meeting the challenges out there in the real world. If you look at the issues which are mentioned here, for example, the world's been challenged in the last 5 years with starting with the the failure of Lehman Brothers in New York and the blowing up of the subprime mortgage market and the ripple effects that it has had, severe effects around the world. We can see that things aren't always going up or improving as we would have liked. We can see that the world financial and economic architecture is being subject to serious ongoing strains. We can see that the governments now in Europe, many of them are saddled with extremely high debts and therefore trying to free themselves of debt burdens by fixing their fiscal imbalances. The debate is an ongoing one whether austerity is making things better or worse, or whether economies have to be stimulated in a Keynesian economic sort of way. So again, this paper and this last area or topic area of the syllabus is very much directed towards preparing the candidate to go out there in the real world to deal with actual issues of globalization. Regulations, we can see that regulations are starting to increase again because the period of experimentation in which industries were self-regulating themselves, particularly in the banking sector, does not seem to have been working very well or very satisfactorily. So it's these themes that the candidate must get a handle on. As though we needed any retelling of the story, the subprime market, the bailouts which occurred in the financial sector, the push for new regulation with the banking system. There's talk of finishing and unveiling Basel III. That's already been actually communicated. It's still a work in progress as far as implementation is concerned. And of course, the eternal fight against political instability, money laundering, terrorism, and so on. Those are also issues which are also on the table. Companies have to be aware of political trends and economic trends in the world. We cannot hide and we cannot ignore or shy away from these issues. They will come and affect our business either directly or indirectly, and therefore management has got to tackle these issues with their eyes open and have policy responses and contingency plans that are designed to be able to meet the challenges that the international environment is setting us. Okay, so understanding of recent history is critical to considering how to move forward. I think I mentioned in an earlier presentation that a philosopher said that those who do not understand the past are condemned to repeating it. And in a way, this is true of banks that have gone through the business cycle, forgetting that markets, property markets and so on, don't always go up, but they also come down, and sometimes they come down with a big bang. And therefore, a bank has got to prepare itself for the downturns which will happen in business cycles, and not always bet only on increasing prices, increasing values. Otherwise, that is bubble thinking. And the problem that occurred in the last 5 years is that a lot of people wanted to benefit from extending the bubble which occurred in a number of markets in the hope that they would be able to grab their bonuses and basically grab the money and run before any crash would come and compromise institutions. Also, rather disappointingly, a number of central banks and regulators have not done their job in anticipating the possible bursting of bubbles and how to respond in such circumstances. So it really, sometimes one has the impression that the international economic and especially the financial scene is populated with the blind leading the blind, and we're still in the throes of working our way out of the major problems. Look at Europe, which still seems to be somewhat directionless in terms of resolving the problems of the Greek situation and the euro. What this all adds up to effectively is one thing. The candidate in paper P4 has got to be a regular reader of the financial and economic news to understand what the current trends are, what the current events are, because these items are what inspires and feeds the syllabus of paper P4. So it is critical to be up to date with what's going on in the world in order to be able to not only do well in this paper, but to do well in their professional lives. The paper is concerned with discussing derivatives, and this still remains at the forefront of emerging issues. What to do with derivative products? Warren Buffett, for example, the celebrated American investor, has said that financial derivatives are a kind of weapon of mass destruction, saying that they can be misused and they can be harmful to institutions. You can contrast that with the way in which we have discussed derivatives in this paper, using them for hedging purposes and not for speculative purposes. I do not exclude the possibility that in an exam question there may be some mention of collateralized debt obligations and credit default swaps. Now, these sorts of things should be familiar to anybody who is seeking to complete a professional qualification in accounting or economics or business. Don't have to be experts in these areas, but we need to at least appreciate what has happened in the last several years that led so many institutions into major problems, and we have to understand the systemic implications, because even if we're not working in a bank, we are affected by what happens in the banking system. In 2009, when the banks stopped lending to companies, companies were in a very difficult situation. We called this the credit crunch, when banks stopped lending, and therefore companies that wanted to and needed to raise capital didn't find it very easy to be able to do this. IPOs were postponed for a period of time, and the markets were really choked for capital. Now, that situation has eased up considerably, of course, since then, but we need to be aware of what ongoing weaknesses exist and vulnerabilities in the system, if only to select which banks to work for, where is your money safe, who can you rely on to be around when you need them in the future. These are very important issues. The companies in the States have accumulated a great deal of cash in their balance sheet. Now, we say that holding a lot of cash is suboptimal and inefficient, but in a crisis, you want to be holding lots of cash. They're holding it for to be able to cushion themselves against shocks that may come down the road, because there still is a great deal of uncertainty in the international economy today. And also, given the declining GDPs in a number of countries, and the ongoing recession, companies, of course, have not been very much encouraged to spend their money on investing activities very much because they have to have something to invest in. So the argument will be, as long as the demand is not there, the investment's not going to be there, and therefore we have almost a vicious cycle, a cycle that works in reverse in terms of undermining the much hoped for recovery that governments and populations have been looking forward to and hoping for. So these are the issues to be taken into account when thinking about what is happening to the to the world in economic and financial terms. Companies have gone through tremendous restructuring. This has been an opportunity for them in the face of crisis to be as lean and as fit as possible to be able to withstand the economic recession so that they come out stronger in the future. Remember, not all companies in an industry disappear. It's the weaker members of an industry which disappears. The stronger members that can acquire the weak ones or win market share by standing longer than their competitors. So there are always going to be winners and losers as well coming out of the current recession. And then it becomes a question of anticipating what the recovery phase is going to look like and how government policies are going to be crafted in order to meet the new challenges of the coming years. And don't forget, there's a renewed impulse towards more regulation. This is a trend which has reversed what had been happening in the 1990s and the early 2000s. So the world is a different place now, and we have to get used to that fact. So once again, keep up with your reading and good luck.